Topic 1. The impact of tariffs and economic policies on U.S. and global growth, with a focus on the OECD's forecast and trade negotiations. According to the OECD's forecast, President Donald Trump's tariff and economic policies are negatively impacting both the U.S. and global economic growth. The OECD has revised the U.S. economic growth rate down to 1.6% for 2025 and 1.5% for 2026, citing uncertainties from Trump's tariffs, reduced immigration, and federal workforce cuts as key factors. Global growth rates have also been adjusted to 2.9% for both 2025 and 2026. Trump plans to increase tariffs on steel and aluminum to 50%, which is expected to raise prices for automobiles, appliances, and food and beverages. This tariff hike will increase cost burdens on U.S. manufacturers and consumers. Additionally, rising trade tensions with China have highlighted the U.S.'s dependence on pharmaceutical supplies. The OECD warns that tariffs and policy uncertainties are negatively affecting consumption and investment, hindering economic growth prospects. Ongoing trade negotiations between the U.S. and China continue, with the Trump administration striving to finalize trade agreements with various countries. However, the ongoing tariff war is expected to hit the economies of the U.S., Canada, and Mexico the hardest. In conclusion, Trump's tariff policies are adversely affecting U.S. and global economic growth, and the OECD warns that if this situation persists, economic forecasts may worsen. Topic 2. Corporate restructuring and mergers, including Disney's job cuts and Toyota's acquisition. Disney is laying off hundreds of employees in its TV and film divisions to expand its streaming services. These layoffs affect areas such as film and TV marketing, TV publicity, casting and development, and corporate finance operations. Disney stated that it is continuously evaluating its operations for efficiency while striving to maintain creativity and innovation. The layoffs will not involve entire teams, but will reduce specific positions. Disney is preparing a new direct-to-consumer streaming service, ESPN, as part of its strategy to remain competitive in the streaming market. Meanwhile, Disney is embroiled in controversy related to its diversity, equity, and inclusion (DEI) policies, with the Federal Communications Commission (FCC) conducting an investigation. Topic 3. Technological advancements and investments, such as Neuralink's funding and AI developments. Neuralink has raised $650 million to develop its brain implant device, which is currently undergoing clinical trials in 3 countries. This device includes a chip that processes neural signals to transmit to computers or smartphones. Neuralink reports that 5 patients with severe paralysis are using the device to control digital and physical devices with their thoughts. Additionally, Neuralink recently received an innovative tag from the FDA for its language restoration device, following a similar designation for its vision restoration device last year. This innovative device program aims to accelerate the development, evaluation, and review of medical devices, providing rapid access for patients and healthcare providers. Meanwhile, Morgan Stanley is seeking a $5 billion debt package for the AI company xAI, which plans to raise $300 million in stock sales with a target valuation of $113 billion. Major investors, including ARK Invest, DFJ Growth, and Founders Fund, participated in Neuralink's recent funding round, which reportedly valued the company at $9 billion prior to this funding. Topic 4. International trade tensions and geopolitical issues, particularly between the U.S. and China, and Japan's concerns over steel industry treatment. The trade war between the U.S. and China is becoming more complicated due to tensions surrounding rare earth minerals and pharmaceutical supply chains. Rare earths are essential for various technologies, including smartphones, electric vehicle batteries, and military equipment, with China holding overwhelming dominance in that.